You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, we got an inverted yield curve, certain predictor of recession. We've got political collapse from sea to shining sea. Nobody can get anything done except here in Florida. And what about the demise of Disney? And perhaps more importantly, is Elon Musk going to buy the world? Or perhaps his next acquisition target after his 9.2% stake in Twitter will be taking over Starbucks. Who knows? The guy is capable of anything, but someone else whose insights had no bounds whatsoever, our good friend Craig Hemke, tfmetalsreport.com. Craig, so what do you make of the madness?
Hey, if Elon wants to buy 100% of TF Metals Report, I'm all ears, man.
And we'll package it with FSN.
Right.
I know a couple other people. He can buy us all.
I mean, you want a foot in alternative media, man. Why not start right there, brother?
Yeah.
This is. Do you remember, Kerry, back in January? We always talk because that's when I put out my annual forecast, and we always kind of go over it. And some years it's pretty good, and some years, like last year, it's like, why didn't that work out? Well, anyway, I remember writing it this year and kind of having some of the same stuff we talked about last year, and we can talk about this, that we're a lot like 2010 and we're a lot like 2019. The Fed is going to show themselves how impotent they are and all this kind of stuff. But I also wrote, I said, man, the only thing I can say for sure about 2022 is it's going to be wildly volatile and unpredictable. I'd say that was a pretty good call.
Yeah.
God, and we're just getting started, Kerry. And as we head into the summer, that was the period I was most worried about because, we got the next set of U.S. elections coming in the fall. By summertime, all this stuff about COVID and, if it ever comes out, and I'm not saying it will, but if it ever comes out that the vaccines and the rush to get them out and everything did maybe more harm than good, people are going to freak out. Mm-hmm. And then when you get these politicians and bankers cornered, like a raccoon in the corner of your garage, man, you don't know what the hell they're going to do. So this year is 25% done. And anybody that tells you that they can tell you exactly what's going to happen the rest of the way is crazy. We can speculate, but man, we got a lot of year to go.
We're so far down the rabbit hole. But one thing I'd like to point out, it's April 4th today while we're doing this call. So Musk just this morning before the opening of the market announced 9.2% accumulation of Twitter, which means that he concluded this buying program on April 1st. So it's an April Fool's joke here, right?
Yeah, I'm glad it's not. I hate Twitter. I hate it. Just because every idiot with an opinion, and 5 followers is on there, and it's just vile. It's like the lowest part of human nature is so often on display there because you'd say stuff to somebody on Twitter you'd never in a million years say to their face. Exactly. And I hate the censorship, and the account suspended, for daring to counter the whatever main narrative that's being promoted. But at the same time, it is utterly indispensable. Mm-hmm. When events happen like February 24th, when Russia's invading Ukraine, at 9:00 in the night Eastern time, you can't sit there and wait for CNN to tell you about it. You go straight to Twitter and go #Kharkiv, and you see, you get a webcam, and all of a sudden you're watching it in real time. I mean, it's utterly indispensable. So if Musk is going to take it over and at least try to eliminate the most detestable part, which is the censorship, great. I'm all for it.
Everyone should be equal on these platforms. I mean, obviously you can't be equal if I'm Elon Musk compared to me. obviously he's going to carry more clout than me, but we should both have in theory at least, the ability to be able to have that potential.
Right.
And when Babylon Bee is banned, we're making obvious comments, observations about the gender of a certain government official, then something is really off. And Musk is a big fan of Babylon Bee. He was interviewed by them, did a lengthy interview. So I think this was a little payback for Babylon Bee as well. And concluding on April Fools, he is the merry prankster. The merry pranksters were a group of basically LSD-addled young 20s people, among being led by Ken Kesey during the acid generation of the 60s. And they went around in a school bus, psychedelic school bus, basically terrorizing communities across the United States and having fun doing it. So, and this is but Musk is terrorizing the elites and having a lot of fun doing it, right?
Yeah. No, and I'm all for it, and we'll just see now, Kerry, since, there are a lot of folks. My buddy Dave Kranzler has been anti-Tesla, anti-Musk for as long as I've known him. Thinks the shenanigans on Tesla's balance sheet are outrageous. And it'll be interesting now if he's going to take over Twitter, which is clearly part of the big tech mainstream media propaganda arm. Yeah, if all of a sudden in the next week or so, you hear some new SEC investigation into Tesla accounting or something, I mean, that shouldn't surprise anybody if you see those headlines.
Yeah, it would be a great thing. Well, one thing that's happened is COVID has basically, it's not over. Maybe the pandemic phase is over and it's gone to endemic, but it's basically forgotten about. The only place you think about COVID is when you're on an airplane or in an airport or a cruise ship terminal. Otherwise, like, everybody's past it. And, I was in the airport this weekend in Las Vegas and in Florida here, and people are wearing their masks like on their chins. They're not even bothering covering, but you got a mask, and nobody is saying anything about it. So at least maybe that's behind us now.
Yeah, and I don't think there's any going back. I mean, there is a certain percentage of the population that was probably prone to neurotic behavior, general anxiety and neuroses anyway. Yeah. Those people are still, you're going to see them walking through the park with a mask on, probably for the rest of our lives, right? But I don't think there's any going back at this point. I mean, unless, some new variant of COVID pops up, and I guess we can't put this out of the realm of possibilities from where it might come, that all of a sudden, people are dropping dead in the street again and the hospitals are overwhelmed and they're, then maybe people will go along, with restrictions again, but nobody's falling for that stuff again. I mean, we did what we had to do. It was ridiculous what they did to us. Mm-hmm. And now people are like learning themselves and are being educated. The more information that's out there about, the survival rate and, how, and it, they call Omicron the Omicron vaccine. Yeah. Which is also, a large, how these things usually run, right? It doesn't do a virus any good to kill off all of its hosts. And so in time, it kind of mutates to the point where it's not as deadly. And then everybody gets it. And then everybody has some level of B cell and T cell immunity. Exactly. And then it just becomes... But then, Kerry, the only other thing is there's still places in the world, apparently like China, Hong Kong, that because they did this whole lockdown stuff, so few people ever got it in the first place. And so there's still going to be hotbeds like that. And then that has ripples through the global economy. And I suppose, that's all part of what we can talk about, too.
Hey, it's so true, man. So true. So, hey, we've seen gold went over 2000. Now it's back down into the low 1900s, low to mid, and it's kind of bouncing around here, kind of ping ponging. You surprised at the strength that it's shown over the past few months?
No, not necessarily. Gold was moving up pretty smartly. through the first quarter anyway, before all this Russia stuff happened. It had already kind of bottomed out a couple times last year. The mining shares had bottomed out at that FOMC meeting and into January at 29, and they were already moving up. Price was about 1840, 1860 already before the war stuff kicked in. So the fact that we're only $60, $80 above there 6 weeks later, people think it's only gone up because of the war. No, it was already going up ahead of that, because what's sinking in now, Kerry, and this is where I mentioned earlier about how this is like 2010 or like 2019. The Fed plays these rhetorical games, and the market, Kramer and CNBC and everything, they're out there, blowing it through their megaphone, trying to convince everybody that, the Fed are these masters that are all in control and all that kind of stuff. And so they play these rhetorical games and say, well, everything's going to go back to normal. Oh, yes. But now everything's fine. So we're going to go back to, a $1 trillion balance sheet, just like it was, it's all bullshit. Excuse my French. It is. And every once in a while, we've seen over the last 12 years, people figure that out. The Fed reveals themselves, the curtain gets pulled back, and then gold and silver just blast higher. In 2009, the Ben Bernanke, as we used to call him.
Yeah, I remember those days.
Remember, and he was like, oh, yeah, no, QE, it's not debt monetized. Oh, I know we're buying treasuries, but we're not monetizing debt. And this is a one-off of only $700 billion. We'll never do it again. And rates will go back up, and we'll go back down to a $1 trillion balance sheet. And everybody bought it until November of 2010, when here came QE2. Yeah. And then not long after that, QE3. And in that period, gold went from $700 at the end of the financial crisis to $1,900. Silver went from 8 to 48. Okay, so then we enter another one of these periods, and this one lasted like 5 years, right? With Operation Twist, and they're going to draw down the balance sheet, and rates are going to normalize, and everybody bought it until the market finally broke. 10-year note got over 3%, and then you got that what was called the Powell pivot, because the stock market crashed 20%. And then in 2019, we entered the year, everybody, all these Wall Street economists were talking about 4 and 5 rate hikes in 2009. It was all crap. And the Fed started cutting by June of 19. And in that period, again, the Fed has revealed for being a bunch of charlatans, gold went from 1050 in the end of 2015, about 1250 at the end of 2018, to, again, as we know, almost 2100 with everything with COVID and everything else. So again, when the curtain gets pulled back, that's when everybody realizes the Fed is full of crap and things go. Well, okay, we're getting close to where the curtain's going to be pulled back again this year, Kerry. Yes. And you're going to see, all this talk about 8 rate hike, and the Fed's going to hike the Fed funds to 2.5% and all this crap. Right. And then we're going to get into this stagflationary recession. Already, the reason people say the stock market's holding up is because it's focusing on the rate cuts that are coming next year.
Yeah.
And so, again, this is going to be revealed for all to see again. And gold eventually will make new all-time highs, and it'll tack on another 10% above there, just like it did last time. And silver will move as well. It's utterly predictable. It's just frustrating watching the narrative play out in the interim, even because how the movie ends, and yet you got to sit there for an hour and a half watching.
Nail biter. The guy is going to rescue the hostages, kill off all the kidnappers in the end, and then live happily ever after.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million-ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well-positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Kerry, I flipped through the channels last night. That movie San Andreas is on. Yeah. You remember that one with The Rock?
Yeah, right.
And The Rock is like flying a plane. He's jumping out of the plane. He's driving a boat, going over the tsunami and all this stuff. And magically, in the end, he finds his daughter. Yeah. The little flooded. Yeah, but you knew that was going to come, right?
Yeah,
but you kind of just sit there and watch all the histrionics and the hysterics leading up to it. And that's kind of what we are. I mean, the Fed is going to have to revert. There's no freaking way that they're ever going to hike rates above the rate of inflation.
No, how can they?
No,
If we're at 20% now, that would mean we'd have to have 25% interest rates. What would that do to the global economy?
Right. And Kerry, how about Germany? Have you seen the German PPI last month was up like 19%?
Yeah, did you
we talk about it as a U.S. phenomenon. Yeah. This is everywhere.
Oh, it's global.
Yeah.
And food prices today were going up 20 to 50%, I heard.
Right. And so what, a couple of 100 basis points in 3 months is going to change that?
It's absurd. It's absurd to think that the Fed's so-called medicine, it's like, trying to give a junkie methadone when they're in the final throes. It just doesn't work.
Right. But yet that's the only tool they have, is to talk about it. And then the mainstream media, I mean, they're all in bed together, right? I mean, CNBC and Bloomberg, they've got to talk the market up all the time. And so, you get every Fed, what are there, 13 Fed governors, man, if there's an open mic, they're going to grab it. I mean, do you remember back in the day, Kerry, 30 years ago, the only time we ever heard from the Fed was when Greenspan would carry his briefcase across the street up on a Capitol Hill. And now it's 10 times a week we hear from from some goon somewhere. It's definitely the kind of end, death throes, all that kind of stuff. They're doing everything they can to prop it up. And I'm not looking forward to it all collapsing. I'm just telling, I mean, it's just headed that direction.
The point where we've passed the point of redemption.
Right. Hey, Kerry, I'm sorry. Obviously I've had too much coffee, but I'll give you one more. You talked about the yield curve.
Yeah, I wanted to talk about that. Yes.
For people listening to us, that's, you're supposed to have interest rates on the short term, like 1 year or less, are supposed to be way lower than interest rates out of the long term.
Because there's less.
And that's for a number of reasons, but not the least of which is inflation. If I'm going to give you money for 10 years and I'm going to you're going to promise it back to me with interest over the course of that 10 years and give me my money back at the end of 10 years. Well, I've had some erosion of my purchasing power, so I've got to have interest of 3 or 4% while you keep my money. Right. And that's how banks make money, right? They borrow from you in your savings account at 0%, and then they loan it out in my mortgage at 4%.
Yeah.
And that's how banks make money. All right. So when the shorter rates are longer than the higher, that's an inversion of that curve. And that is always a signal. I'll give you one more, Kerry, that's even an infallible indicator of recession. You go back 50 years and look every single time that the BLS has printed an unemployment rate at 3.6 or less. Mm-hmm. It's happened like 7 times. Every single time a recession has followed.
Yeah.
And that's what we got last Friday. So this is coming. And again, so what's the Fed going to do? Hike Fed funds to 3% just as a recession is beginning? Come on, man.
The question is, how bad will that recession be? Will the recession itself, because recessions are deflationary by nature, can the impending recession be enough to bring inflation down? And that's where we get into that whole discussion of stagflation,
right? Where
economy, you have effectively zero growth or even slightly negative growth,
right?
And you have prices going higher. I had a certain person who's I consider a friend, but he's kind of like establishment, and he's trying to tell me that the Fed is going to be able to sterilize that $6 trillion they created, that they handed out to individuals and PPP, unemployment and all this. And it's like, you can only sterilize it when you give it to the banks, because then you can force the banks to deposit it with the Fed. You can't sterilize it when it's already gone out into the general population. So the whole quantity theory of money, maybe it isn't always accurate, but in this instance, the more money chasing the same or lesser amount of goods is going to lead to higher prices.
Right. Tell your friend that there might still be room down at Jonestown or Jamestown or whatever that place was. If he prefers grape, or ask him if he likes
or Hawaiian punch, or he could be a Branch Covidian. I don't know.
Yeah, that could be true too. Yeah. So, if he swallows that line about the economy, he probably swallows the other lines. But no, and so anyway, this has all real world complications, implications.
Sure.
For everybody listening to us. And so you just got to plan for all, for this eventuality in really almost every aspect of your life, whether it's investing or whether it's your home and how you're going to protect your home,
Yes.
how you're going to feed yourself, how you're going to take care of your family, your extended family, people that you love, how you're going to help them. Because again, not only the rest of this year, but going forward, we're in that kind of, you talk about the pandemic being in this endemic phase, the monetary system's in its endemic phase too.
Yes. And what you're saying. So right now, you want to be borrowing as much money as you can that you can afford to pay the debt service on, putting it into assets that are going to benefit from inflation. That means either you have cash flow that's going to increase. It's really such a simple formula till the whole merry-go-round comes off the axle and spins off into space, But until that point, your investment decisions now in an inflationary environment are much simpler than in a non-inflationary environment.
True. Yeah.
Right.
And, and Kerry, to that end, people think that you and I, if they just came across your channel and, just happened by TF Metals Report, they probably think all we talk about is, sound money and collapse and all this kind of crap. But some of the best performing stock markets of all time have been in hyperinflationary environments.
Yeah.
Right.
Yeah.
And
that
so,
is when assets. If you can borrow cheap, buy assets, produce cash flow, you get a double whammy because the return on your assets is going to go up. If it's rental property or whatever it is, whether you rent stuff out or sell it, your return's going to go up, and the inflation is going to drive the asset value itself up. Now, it might be worth the same as when you bought it, but your debt as a percentage of your ownership, like with housing went up 20% last year. You had a 3% mortgage, 17% increase there. But then in addition to which your real interest rate was minus 17%. So you actually had like a 37%, if you deduct the 3% interest, 34% return on your money. And because you were leveraged, and the value of what you owe, the inflation adjusted liability, what you borrowed, that value has gone down as a percentage of the property. This is how you make money. This is how the wealthy get super wealthy in inflationary
Which
time.
is what they've been doing, particularly over the last couple of years. And this is all very true. Where it's going to get ugly is the fact that, the people that there's a vast percentage, a majority of people out there that don't have assets, that don't own a home, that don't have any investments, that don't even have, I'm sure seen the studies, they don't even have $500 in the savings account if, all of a sudden their brakes go out. And so it is those people that, and I don't mean to make it sound like those people, but that is a recipe for significant societal unrest, civil unrest, and this is, so there's, it's fun to talk about preserving, your own personal fiefdom, and investing and making sure you've got food and, water and, and everything else that goes with it. But there's the vast majority of people out there won't benefit, financially if they do these right things. And instead they're going to really, really suffer, which in its own right is a tragedy. But then you start thinking about, where society goes, and we go down that rabbit hole you mentioned.
Yeah, it's a rabbit hole. Well, what about food shortages?
Right.
To be baked in the cake. I don't think we're just going to run out of food and you won't have any food for a year,
But maybe you can't.
Sporadic shortages.
Right. Exactly. And then the truckers that maybe, they can't afford to keep delivering it.
$5 diesel fuel, $6.
$5. Yeah.
Yeah.
So there, and then again, anyway, I don't mean to make it sound, all doom and gloom but these are things that, man, if you're not out there thinking about these things and how this would impact your family and your extended family, then you're just whistling past the graveyard.
Yeah.
This is a time to be really planning ahead and trying to be as clear thinking about it as you can. Agreed.
So make sure you go over to tfmetalsreport.com right? Did I get that right?
Yeah, that's right. Nice job.
You got it right. And I remember it. It's etched on my brain now. And for less than the cost of a Starbucks latte, which may become a Tesla.
May not be that way for long, Kerry. Latte may.
Yeah.
It may be far less than the cost of a latte. Well, the way things are going.
Yeah, I mean, God, it's up to $6. My drink. I keep getting all these coupons and stars and everything, and it's still like I've cut back. Not for that, just because I'm kind of sick of it. But it's up to like $6 now.
Yeah.
So therefore, TF Metals report is really a steal at these rates, Craig.
Well, thank you, Kerry. Yeah, you'll find besides the daily discussion and analysis of what's going on in all the markets, just the community itself, people will find kind of a like-minded group, people that are all in it together. So in a time like that, I guess the thing kind of sells itself, basically what we talked about. In a time like this, you need kind of shelter in a storm, people to help you out. So that's what we do.
And it's weird thinking about it, like the pandemic really increased alienation and kind of broke down communities to some extent. Mm-hmm. And now really with what's happening, you need to rebuild those community ties and links and your connections with your community, whether it's online or your neighbors, whatever it might be. Unfortunately, it's like so many things, Craig, some people see it coming and you and I see it coming, but so many people so many of you out there have your head in the sand. You got to get it out. You got to prepare, not saying become an Uber prepper, because that's got limitations as well, as we well know, but at least take some basic self-preservation steps. Right.
Just for that. And just paying attention means you won't be caught flat-footed. You won't be the last guy waiting to get into Costco.
Yeah, exactly. Maybe now's a good time. I've told many of you out there, if you've got particular drugs that you're specifically dependent on, get a year's supply of it. I've got a couple of them myself, nothing major, but I'd rather have them than not have them. And I've been accumulating them up to about 6 or 9 months on most of those drugs. It's easy enough to do. Just mostly they're generics anyway. They're in plentiful supply for the most part. Just get them now. It's an insurance policy that doesn't cost you hardly anything to put in place, but you'll be ready if there are disruptions, which very well could be the case for all the reasons we've been talking about, Craig.
Right.
Hey, if you got a question for Craig, shoot me an email, kl@kerrylutz.com. Don't forget the free newsletter, financialsurvivalnetwork.com. Sign up now. Craig, we'll talk to you again very soon. It's definitely getting interesting.
Good to see you, my friend.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.